Good morning, good afternoon, good evening, everybody, depending on where you are. It's morning for me in Australia, afternoon in the USA, and I'm joined by Andrew Jewett from Property Coin. Andrew is one half of the team, the other half, Matt Miles, is busy at the moment. But we've got Andrew here. Andrew is co-founder and co-CEO of this vertically integrated real estate technology and investment company called Aperture. And been in Aperture for a while, and now coming onto the blockchain via Property Coin. He's a blockchain enthusiast, a crypto lover, entrepreneur, and all-round cool guy. So, Andrew, tell us, your experience in property has been many, many years.
Yeah, I started in U.S. residential mortgages and property in 2005. Matt actually in 2001. We've actually both worked together since 2005. This is our third different company together. Yeah, was focused on Wall Street, focused on residential mortgages, real estate, financing, trading, investing, you name it, we kind of touched it. And then actually, after that, Matt and I ran capital markets at the largest investor in fix and flip properties in the United States. And that's where we met our third co-founder, Rudy Cortez. So the three of us have worked together for quite a while now, and Aperture is kind of our baby in utilizing data and technology and now blockchain to kind of revolutionize and change the way real estate is transacted, specifically distressed real estate in the United States.
Right. There's been a lot of talk about smart contracts and real estate agents and lawyers possibly losing a bit of market by using smart contracts with the blockchain. Do you care to comment on that?
I think that's probably a bit. They may lose a little bit of money, but somebody still needs to create the legal framework around it, specifically as it relates to regulation. And in the U.S., the SEC. We took the path all along. We actually started this project back in June, July of last year. We took the path that all along these are securities, and we should go down the proper route of issuing a well-structured product. So I think, smart contracts may take some of the money out of the lawyers' pockets, but creating these structures is certainly going to put some of it back in. And I'll be the first to tell you it's quite expensive, and there's a lot of work to do. But I think it's all a good thing, right? There's just so many stories of scams and people doing the wrong thing just in terms of legality and trying to get around regulators, and it's just there's just no way to operate. And so frankly, I think lawyers will benefit quite well. Yeah.
I mean, there's new legislation being talked about all the time, both in the US and in Australia. You guys have the SEC and we have ASIC or APRA, who are trying to decide, is a coin, is it a security, is it a currency, is it a stock, is it a property, what is it exactly? Like, how do we tax it? How do we regulate it? Yeah. And as you know, there's been no regulation. And I was reading a report the other day on investopedia.com, and they said that around about 80% of the ICOs that came out last year were total scams, and a lot of people lost a lot of money. So what's so amazing about yours? Why should we trust you?
Well, first of all, 80% is a huge number. I hadn't heard that, but that's shocking. I think the biggest difference between us and some other ICOs out there is we are, and first of all, we're an existing operating company. We started Aperture in 2016. We've been buying properties all along. We have, an extensive track record as a management team, and it's not just Rudy, Matt, and myself. It's, we have a head of our loan business. We also lend to smaller investors as well. He's a guy that's been in the industry for 25 years and originated, more than $10 billion worth of loans. We have our CTO is a guy that we worked with at RBS, who built RBS's enterprise data inventory and kind of asset management systems, and so now he did the same thing for us. So we have 13 people on our team right now. So we are a real company. If I turned the camera around, you'd see I'm in my little office here, and there's people outside, and we have a real working team. But I think you have to look at, and I try and tell this to people whenever we talk about ICOs or STOs, as we like to call ourselves. You have to look at the management team. You have to look at the diligence on who they are and what they've done. And I think if you go to our LinkedIn's, or if you were to kind of dig into who we are, you'd find that we've been in and around this space for a long time. I like to think that we've got a great reputation on the street, as former bankers and turned operators, that we do what we say we're going to do, and we operate ethically and morally with our counterparties. So we like to hold that as something that makes us maybe a little bit different than that 80%, and that's even before you talk about our business plan, right? Our business plan, which we can get into later, is completely unique and different, and I think there's a whole new use case for blockchain as it relates to real estate and securities. But from a trust perspective, it's hard. You can't say like, hey, trust me, because everybody says, hey, trust me. But I think if you did a little diligence on the team and our company, you'd find that we're legitimate operators, and we try to operate within the bounds of legality, because that's, I don't want to go to jail. I like living in California. I like living in the U.S.
You've been in a very regulated industry for the last 15 years or so, and obviously last year a lot of these ones that sort of popped up out of nowhere, these guys who are saying, look, I'm a blockchain expert, or I'm a Bitcoin expert, all of a sudden, because it was in the media, and we had like multi-level marketing companies pop up and pyramid schemes pop up, and these guys have now gone and disappeared with millions or even billions of dollars, some of them.
Yeah.
So it's good to know that you guys have been literally around the block a fair bit. So tell me, why US property? Is it just because that's where you are? You don't want to look at emerging markets like China, Brazil, Russia, or other places like that?
Well, I think we do eventually, but right now, what we've built is a kind of property analysis and identification and kind of process management system, and that system identifies over 3,500 properties a day. So obviously we can't buy
3,500 a day.
Yeah. So obviously we can't buy 3,500 a day, but even if we were to buy the best 2 a day, it would still require $40 million worth of capital a year. So first and foremost, it's very capital intensive, and that's just on the we call them flips. That's just on the flip side. If we were, our goal is to have a decent sized mortgage lending operation, which would be $20 to $40 million worth of product a month. So an incredibly capital intensive business. And those 3,500 properties a day are in our target 11 markets across the country, and that only represents coverage of about 8% of the total U.S. population. So first and foremost, there's huge room to grow in the U.S. We've long said that kind of phase 2, 3, 4 is let's start getting the data and looking at other markets across the country. One of the things we like to say is that residential real estate is the single largest asset class in the world. $102 trillion dollars market. There's plenty to go around, right? There's just so much, and it would take a ginormous amount of capital to be able to kind of have any real dominance in the market. So we like the U.S. and we like the markets that we're in right now, and we want to expand on that. But that's a little further down the road for us, just in terms of sheer growth.
Yeah, I understand. Keeping tabs on 3,500 anything every day would be a massive ask.
Yeah.
So, you're raising more capital through the issue of property coin. You've had capital in the past. Now, I noticed in the white paper there's some beautiful before and after pictures. I must confess I didn't read every single word of the white paper because there was pretty pictures in there. Tell us about some of the successes you've had in the past with buying properties and dressing them up and flipping them.
Yeah, I mean, we've been small, right? So to this point, we've had a small friends and family fund, and a lot of it is our own capital. We've been fortunate enough in our careers to have saved up some money and invested in not only the operating business, but in our kind of funds or property acquisition vehicles. And so we've used that, and we've kind of used that to test our system. We typically, honestly, one of the things we like to say is we're not afraid of the boarded up house. That represents an opportunity for us on a couple different levels. First and foremost, we can come in and buy it, and it's going to make a profit. We perform value added repairs, and we then kind of sell it on to an end user. We typically don't do rentals, but if there's the right bucket of capital, that's great. A great income stream. But more maybe altruistic of us, and one of the things that when we started this thing, we said we want to have a social good. That house and a lot of these houses that we're buying haven't been occupied by anybody and have been nuisances to the community. What we do is by definition is community redevelopment. We come in, we buy the boarded up house, we buy the blighted house, we fix it, and we install somebody who's going to be a good neighbor, a good citizen, a taxpayer. So we like to think of ourselves as a socially responsible company. Look, we make a profit, but we also, we're working right now on partnering with some veterans organizations across the country, some housing-focused nonprofits across the country to work with them on providing either early access or kind of special benefits on the houses that we sell, to get their community in. So if it's be a veteran or somebody who's had a hard time and is looking for housing or just affordable housing, right? We like to focus on affordable housing markets. We're not buying the $5 million house in LA that's on the hill and has beautiful views of the city or the beach. We're buying the working class, kind of most liquid price point, most attractive market for that working person and working family. So we like to think of the social benefit that we provide, but in the end we make a profit too.
It's good that you're giving back, because that's sustainable. Businesses who just take all the time, they're eventually going to implode. You're not just literally buying the worst house in the best street and then making it beautiful, because obviously, that, as you say, that provides affordable housing for somebody. It also increases the value of the area, because if I was living next door to a house that was all boarded up, that's going to affect the value of my home. So you're creating value in the whole community, but you also use locals as far as renovating the house, don't you?
Oh yeah, exactly. And that's part of our model is utilizing local contractors and realtors, and just by virtue of the fact that we're paying them and we're employing them, we've helped out that community. That's a great point. One I often forget about, but it is, we create jobs too.
Yeah, creating jobs, creating affordable housing. It seems like a wonderful sort of utopian dream that you guys are creating here.
Yeah, I mean,
and you get to make money as well, right?
Yeah, exactly right. It's not just that we make money; it's that we can provide this service to those communities. And look, we're not at any scale where we're like truly making an impact in grand scale, but that's the goal, right? The goal is to have this be a hopefully multi-billion-dollar platform that can be buying thousands of houses across the country every year, and really making an impact on a much bigger scale. Right now, it's kind of onesie twosies, but that's a function of how much capital we have right now.
A lot of people are critical of the trickle-down effect, and we don't want you guys to make $40 billion and then promise that you're going to give some back later. But I think you're creating a ripple effect, because even as you might be employing 12 or 13 contractors in that community, but those guys have all got families. They've all got kids that they're going to send to school, and that money then ripples out into the community. And as I say before, by you doing up the worst house in the best street, that impacts on the value of the house behind it and in front of it and next to it, and possibly 3, 4, 5 doors down, if not a block away as well. So creating a lot of value, which is good to see. We love that stuff.
Thank you.
Now, you guys have been in the market for a long time. You've been doing this for a long time on a smaller scale. Obviously, every few years, maybe every 7 to 12 years in the economy, there is this sort of a blip. There's a crash. There's a boom. There's a whatever in the cycle. So, what lessons have you learned from buying and selling properties during the GFC and through the hard times?
Oh, God, the first and foremost thing is never wait out a market. If you start to see signs of a bad market, you drop price and you sell and you get out of it and you live to fight another day. One of the things, as I wasn't in the kind of acquisition seat. Our partner Rudy was during the crash and the kind of the recession. One of the things I saw as a banker was people trying to wait out the cycle and kind of see when it would end. And I think, give credit to our last company. They did a brilliant job of spotting it, not only spotting it early, but reacting and acting early. And they were able to, be in cash very, very early in the cycle. And frankly, it's a great, if you can see that, and one of the things we like to say is that we have real on-the-ground data of what's going on with every property that we buy in every given market that we operate in. If you can have that data and that insight before everybody else, and you can get to cash and you can get liquidated with either minimal losses or just a loss in profitability. Maybe you were supposed to make 50% on this and you only made 40%. That's a great trade for me. But you're now sitting in the opportunity on the back end, or you're sitting there ready for the opportunity on the back end, right? And that was where our last company did a brilliant job, is being available and being ready to buy as the market kind of swung back up. So, I think never wait out a bad market, and bad markets happen everywhere, all the time. We saw it in 2014. There was, especially in California, there was a dip. There was a little bit of a hiccup, the person with the most data and the person with the ability to react quickly will be very successful in those markets. And so that's what we hope to have. And by building our kind of proprietary data and technology system, we think we do have it. So I'd say just knowing what's going on with the markets, knowing where you are on a macro level. We're right now, we're based in LA, but we don't buy in California. We think California is overheated, maybe not necessarily ready for a pop of a bubble, but certainly closer than some other areas across the country. And so we had the fortunate opportunity when we started Aperture to kind of wipe the slate clean and say, where do we want to be in the country from a macro perspective, and looking at what's gone on in markets during the crisis, during the last 3-4 years, and where are we in relation to the crisis. So we've been really careful and selective on the markets that we chose to operate in.
I guess being in banking as well as being in real estate, you'd be able to see, when loans aren't getting pushed through or when bad loans are getting pushed through, and that gives you an indication of what's happening. Because obviously pre the GFC, there was a lot of warning signs. There was the subprime rumors and things like that about 2 years beforehand.
Yep.
So if you keep your finger on the pulse, you sort of know what's going to happen down the track.
Yeah, and I think one of the things that I was on Wall Street in that industry at that time, and you were kind of seeing it, but the people who really see it are the people who own properties, who own them on the ground. Like, they know how many offers they've received, or if those offers are 10% back of their listing price, that's a red flag, right? And so we think we have an advantage in that we can see that firsthand. Yeah.
Very cool. Now, one of the very unique things about your property offering, I know we've seen other property coins springing up, and some of them are like 30% asset backed or 40% asset backed, 50% asset backed. You guys say you're 100% asset backed. And my immediate thought was, these guys are ridiculous. because you've got to be sustainable. You've got to feed yourself, right? So
Yeah.
how do you guys actually feed yourself when you're giving 100% of the money back?
Well, first and foremost, we are taking a management fee that's gonna pay the bills. I think if you look at the traditional model of Wall Street, they take a management fee. That anybody who's a mortgage loan servicer or asset management manager takes a fee. One of the things that we're actually about to change. We're about to launch a new structure to the market based on some feedback. We are going to reinvest 100% of those profits, as you said, but we are actually going to retain some of the tokens. Before we hadn't thought we were going to retain some tokens, and I think the feedback that we got from the community was, why aren't you retaining tokens? Everybody retains tokens. I know that's how I know you're aligned with my interests. And we always thought
you've got to have some skin in the game, right?
Yeah, and we always thought that a profit share was what meant we were incentivized to create profits. But I think it's a little bit different in the crypto world, where they want to see you have like real equity, like back-ended equity in the form of tokens. And so we're going to announce this week that we're going to kind of shift the structure around based on the community's feedback, really. And 100% of the profits will be reinvested, and we'll retain some tokens, but we'll take a management fee that'll pay the bills, pay salaries and keep the lights on. But we're in this for the back end piece of it. And so that's, look, we're kind of indifferent. We always just thought that the community wanted us to be aligned in terms of creating profits. And I think the way they told us that they'd prefer it is hold it in the back end, and then you're really incented to create more profits, but which will in turn create a bigger token price in 3 to 5 years. So
we want to know that the CEO actually owns shares in the company, because then you've got a vested interest in making the shares go up.
Right. So, right. Exactly. And we'd always thought that was, I guess from our perspective, we were aligned with our profit share, but we're happy. We want to own tokens. I would have loved to own tokens from the beginning. I'm glad I do now. So we're excited about this, and we think it makes it a much more appealing structure to the market. From an economics perspective, reinvesting, all of the profits will only further enhance the growth of the underlying asset base.
So anybody who's buying the tokens now, they will actually be buying like a very small part of a house somewhere in your local area. So I might, put in $50 and I own a brick and you own a brick and somebody else owns a brick. But obviously when you add value to it, the price of the token is going to increase for everyone.
Yes.
So, obviously you can't predict the future. You don't have a crystal ball, but can we look back at some of the other properties that you've actually purchased and improved and flipped? What sort of returns are we talking?
So to date, our unlevered internal rate of return is about just over 50%. So we typically have a hold time of about 4 to 6 months. I don't know exactly what our average hold time is on these the previous portfolio, but it's under 6 months. And so on any given property, we're making anywhere from 18 to 20% cash on cash. And so when you turn that, over 2 times a year, that kind of, you look at it annualized, it looks like a, 50, high 40s to 50-ish% unlevered return. And we like to throw unlevered returns out, because I think, once you involve leverage, that kind of adds another dial that you can turn in terms of what your returns are, right? If you have more leverage, your returns are going to look great, but you're obviously much more risky, just from a pure structural perspective. Versus if you take less leverage, your returns are going to get dialed down, but it's a much safer investment, right? So we like to look at it. What did the actual trade? What did the property do? And that's where we like to tout our numbers, because I think they're pretty strong. Actually they're very strong. But Obviously, like you said, I don't know what the future is going to hold, but we hope that we can maintain those numbers, and we think we can.
Well, you've been doing it for, what, 10, 15 years now. Now, just to clarify, that 18 to 20% return, that's after we've taken out the cost of the contractors and the painting and the new fences and whatever else.
Right. Yeah, that's net.
Okay. Yeah, that's very impressive, mate. Very impressive.
Thank you.
Very good. So was there a moment where you said, okay, look, we could list this as a security, we could make this some sort of like property mutual fund through Aperture, or like why was the blockchain your final decision?
Well, first and foremost, we are raising capital via other methods too. We view this as a diversification of our capital sources. But I think more importantly, we see blockchain and securities on the blockchain as the future of securities and finance in general. I think the use case of tokenized securitizations and securities and assets on the blockchain, and just from a simplistic perspective, the reduction in friction on the back end and potential liquidity of assets is a game changer. I just think that this is, in 5-10 years, we're going to look back and say, why did we ever have anything that wasn't on the blockchain? Frankly, right? Like, I always like to say when somebody says, well, why don't I just go buy a REIT? And first and foremost, there's a lot of differences between us and a REIT, but
just for those watching at home, it's a REIT is a real estate investment trust, kind of like a little managed fund.
Yeah, sorry, I should have clarified that. Either a REIT or like a hedge fund that's focused on residential real estate in the U.S. And first and foremost, to my knowledge, and I've been in and around this industry, there's nobody that's offering access to fix and flip assets anywhere. We're kind of the first one that's kind of offering it publicly. But the other piece of it is, go try and sell that on the open market. You're going to get hit with an immediate 20% discount just because of the friction of transfer, right? So if you eliminate that friction, you should, in theory, increase liquidity and increase or decrease that premium that you're, or the haircut that you're going to take in trying to trade that asset. So that's why we think this is really special, and we want to be, to our knowledge, we're the first professionally managed fund that's doing this, is specifically in real estate. There's been some others that are crypto or other assets, but we want to be innovators in this space, and we see this as a use case in and of itself for the blockchain on a go forward basis.
Yeah. Well, peer-to-peer is obviously a more frictionless exercise. Like traditionally in banking, I'd put $100,000 in the bank pays me 1 or 2%, but then they lend that money out to someone else who's paying 5 or 6%. So obviously cutting out the middleman, as you're doing here, is a great idea and should benefit everybody. So fantastic. You're still at this early stage. I know Bitcoin's been around for 8 or 9 years now, but most people didn't hear about it until last year when it really got into the media. Yeah. And I'm comparing it to the early days of the internet. I got on the internet back in 1995 because my sister moved to the USA and I wanted to communicate with my sister. So I hooked up the internet at home at a time when it was like literally 2 or 3 years before anybody had the internet or they were using it for business. And people looked at me weird because, like, from their perspective, the only people who use the internet are like criminals and like sex perverts and things like that. So like I was the early adopter. How did your family react to you saying, okay, look, Andrew used to have a real job and he used to be in banking and now he's gone into crypto. Like, that's the domain of drug lords and stuff, right? How do they react to that?
It sounds so familiar. Like, Bitcoin, that's what people used on the Silk Road, right? That's where you buy drugs on the internet. Like, what are you doing? It took some explanation for sure. My parents were kind of miffed. No, I don't want to say miffed, but like, what? Huh? Crypto? I thought you were starting a real estate company. What the heck are you doing? They're fine with it, and I think they've actually taken a little bit of a pride in the fact that when somebody says, "Oh, have you heard about Bitcoin?" you say, "Oh, well, actually." My in-laws, for example, were out here last summer when we were really kind of digging into this, and they said, I've heard people at work talking about Bitcoin, and then I tell them about what you're doing, and I'm, it's really cool, and I can be the kind of the expert in my office or in their church group or whatever. It's been kind of fun, to be honest with you, because I think it's starting to get to the point where that mainstream adoption is coming, and we're still very early on in that. But the people around me and around us, and our wives and our families have really taken to it, and they shoot me emails and notes and questions about what's going on with the SEC and this subpoena and that subpoena and how's that going to affect us. So it's been a lot of fun. I think everybody was very I don't want to say skeptical, but unsure about what we were doing in the beginning, and now they've all come on board. So it's been great to see that adoption from them.
Very good. I guess one of the things with Bitcoin, the people who got in very, very early and paid, like a few cents or even a couple of $100s for their Bitcoin, and then 2017, where it went from $1,000 up to $25,000 in Australia. And people going, oh my God, I'm missing out on becoming a millionaire. So then, of course, there was people who bought in December at 25,000, and then over the next few weeks or few days even, they watched it drop from 25,000 down to 6,000 or 7,000, because Bitcoin isn't asset backed. It's all just based on consensus.
Right.
So obviously, that kind of volatility is not going to be such a problem with 100% asset backed in property.
Well, we certainly hope not. I think that was one of the things that gave us the idea for this. In the summer of last year was, look, I'm all for, and I'm an evangelist of cryptocurrencies and this storing of value, and the value is what I'm willing to pay you and you and me, and that interaction is awesome. I'm totally hooked on that. I believe in it. However, there is the ability for these wild fluctuations. And so when we thought about it, we said, hey, look, our careers are in asset-backed finance. Like, that's what we've done our entire career. Why shouldn't we bring a product to market that hopefully has some stability to it? Because, we will be posting the value of the assets owned by the trust on a monthly basis. We will be showing people that, hey, there is a segregated bank account for Property Coin. There's a segregated entity that owns the assets of Property Coin, and that's what each token represents ownership in. So, we're hoping to bring a little bit of, I hate to call it a stable coin, because I think those coins are now taking on a different meaning, but a stable, growing asset base that provides a strong investment thesis, right? We buy homes, we sell them, we fix them up and kind of create this property arbitrage almost. It's not purely riskless, but kind of is. The thought of bringing that to a cryptocurrency or a token is really appealing to a lot of people. It's just, we need to get that adoption going. I think there's still a lot of hesitation on security tokens. I think a lot of the traditional crypto people don't either understand it or are a bit reluctant to start to get into that world, but it's certainly coming. I think you're seeing folks of the like of T0 and Templum and a guy that we know really well, Anthony Pompliano over here. He's a bit of a securities token evangelist, and we've been working with him a bunch. And just it's about to turn. I think you're about to see a lot more asset-backed, a lot more securities offerings that have some of the best principles of traditional world investing, but also kind of some of the best pieces of like we were talking about, reducing friction, peer-to-peer transactions, and all of that beneficial aspects of the blockchain and cryptocurrencies.
Obviously, 2016, 2017, there was a lot of ICOs, the initial coin offerings, which literally someone could just make up. They could just write down on paper, I want to launch, 20 billion of these, whatever it was, dodgy coins. Yeah. and those things, they'd just be sold, and that person would become the bank. And sometimes, that person, we saw one actually this week who left the country with $45 million worth of investors' money, and just posted on Twitter and said goodbye everybody, and I'm off. Sent a picture from the airport. But you're talking, instead of the ICO, you're talking about secure token offerings, or the STOs. But you don't like the term stablecoin. I thought the term stablecoin was great because it actually tells you more about what it is, whereas a security makes a lot of people think, well, okay, you have security, but there's also stocks and shares have traditionally been called securities, and stocks and shares can fluctuate a lot. Is there something you have against the term stablecoin?
No, I don't, and I like the idea of stablecoin. I think what it maybe looks more like is and again, talking about Tether can kind of like, you're either like touching the third rail, or you've got people who just hate it. But I view stable coins maybe more as like a some sort of 1-to-1 ratio where it really is stable. It's not going to go up in value by any real amount, and that's where we think ours we hope will. If we're producing,
you think stable means boring?
Kinda. I think ours will be stable in that it won't fluctuate, excessively. But I also think it's not going to be the kind of flatline stable coin. It's going to be an investment token that appreciates over time. We want this to be the kind of cornerstone of any well-rounded crypto portfolio, that you can kind of like put it in the portfolio and forget about it, and in 5 years' time, it's tripled, quadrupled, or whatever the number is. We think that by reinvesting those profits, and if they're kind of consistent with what we've been producing, that could be anywhere from 40 to 50% a year. Look, I like the concept of stable coins. What I fear is that we could get lumped into that, and then because there's also the piece of stable coins where it's kind of like there's just a never-ending supply. It's just ubiquitous, and that's not kind of what we're trying to create here. We're trying to create a closed ecosystem where this becomes really valuable to the market, and then we can go and create more if we want to, a completely different entity, and this thing will still exist over here and be growing and growing and growing. So, I don't mean to bash on stable coins or the moniker of stable coins at all, but I think you're starting to see this divergence maybe of what is truly a stable coin versus what is an investment coin or an asset-backed coin.
Now, I understand Tether, which is just basically pegged to the US dollar, and if you can make 1 or 2% on a bank account in a year, then you're doing okay. Whereas obviously, as we talked about before, Bitcoin going up by 2,500% within a matter of a few months, and then dropping by 80%, then that's obviously not preferred option. But possibly the secured coin somewhere in between, if you can get more than 2% and something less than an 80% drop, that's going to be appealing.
Yeah, I hope so. That's certainly our thesis.
Obviously, I'm representing the Boston coin at the moment, which is why we're having the conversation. And Boston's 90% backed by crypto and technology stocks. So we don't have the 100% asset backing that you guys have, but then we didn't think about taking the management fee on the trades. We just thought about taking that first in, first out. So I'm hoping, for your sake and for my sake, there is a more secure token offering, and some of these froth and bubble ones just sort of disappear. Where do you see the future of cryptocurrency going?
I think that's exactly it, right? I still think there's a tremendous use case for utility coins. I think that's in large part one of the best developments of the last 5 years in the crypto world, is really creating that ecosystem where there's an interaction that doesn't necessarily require money. So just
paying for your coffee and paying your friends for their services and things like that.
Yeah. I think as a replacement for currencies and for dollars and for whatever you want to use it for, I think that's an absolutely fantastic use case. I think where we're going is the kind of the next evolution. And where I oftentimes get into some heated arguments with people is, I'm not saying one or the other should be the winner. Like there's a world, and I think this is where the future is going, of like these two things coexist. Securities can go on the blockchain. Use cases for some sort of ecosystem should be on the blockchain. So why do people get so angry from this world, the traditional utility and crypto world, at what's coming from the securities world? I don't understand the kind of the anger and the fear. I think where people get concerned is the regulators coming in and regulating this environment. But like from my perspective, this environment has to be regulated. There has to be some sort of adult in the room governing what's going on and preventing some of these scams, like you mentioned, like the guy walking away. I think actually it was found out that that was just a very, very bad PR stunt.
Oh my God.
Yeah, I think he's like, he came up a couple of days later and said, no, I was just kidding, but I was just trying to prove a point. But nonetheless, a horribly
a lot of people would have sold their coins when they saw that he'd skipped the country.
Right? Yeah. I mean, it's certainly he didn't follow any.
Very bad joke. It was not April Fool's Day. It was just a very, very bad joke. Or maybe they caught him and he has to come back and says, I pretended I was trying to leave, but everybody knew his name and his face, so it wouldn't have taken long to track him down anyway.
Yeah.
But I think going back to the olden days, the olden days when if I wanted to buy shares, I would actually walk into the stockbroker's office and talk to him, and I'd pay him $60 or $70, which was a lot of money, 25 years ago, and then he'd place the trade for me. We used to go to the travel agent and we'd book our travel, and we used to walk into the bank and hand our money across the counter. And I remember when internet banking first came in, people going, I'm not putting my banking details on the internet. I don't trust the internet. But then when you realise that you didn't have to drive down to the bank, you didn't have to find a park, you didn't have to line up, you go, it's kind of okay. It's an okay trade-off because it's a lot faster, saves a lot of time, and also saves the expense of driving down there and using your petrol and using your time. And buying shares over the internet became quick and easy. So I think the blockchain, if we can call the blockchain Internet 2.0 or 3.0, so there's already people transferring money, as in dollars and cents, online. There's already people buying stocks and shares online. I guess there's people buying property online as well.
Yeah, and that's exactly what we want to do. I mean, we want to provide an investment vehicle and an operating access to an operating model that we think we've created a unique advantage in the U.S. market, and so we want to share that with people. And I think because we're so early, there's certain how do I say this? It's kind of like being a first-time issuer of bonds. In our past lives, of like, you're going to pay the price because it's new, and you're going to be kind of the guy who gets all the scars on your arms from cutting the untraveled or unexplored bush, but you're going to be the one that gets there first and kind of has the experience of doing it. So I totally agree with you. I think this is Internet 2.0. This is to steal a phrase, like tokenize everything. Like this is coming, and we want to be at the forefront of it.
Yeah, obviously the early adopters are the ones who may occasionally get burned, but they're also the ones who get rewarded. And a lot of people say, I wish I had have invested in Facebook 10 years ago, or I wish I had have invested into Apple 10 years ago. Yeah. But you've also got to remember that you could have invested in Nokia 10 years ago when that was the dominant one, or you could have invested in MySpace 10 years ago when that was the dominant social media. So I guess by diversifying, which you guys are doing as well, that's going to make sure that if you get in first, then you're not going to get burned. And obviously the ones who take the risk first are also the ones who can make the rewards down the track. So I can see the future where there's like dozens of people jumping on your bandwagon and saying, yes, we've got a property coin too, but you guys are first to market, or among the first to market, and certainly the first one I've heard that's 100% asset backed. So that's amazing. Andrew, we're almost out of time. Thank you so much for taking up your afternoon with us. Yeah. Please tell us where we can find that wonderful white paper with the beautiful pictures of the properties that you've done, and where people can buy the coin.
It's propertycoin.re, and you can go through the whole process there, get whitelisted, I think actually you probably can buy at this point. We're technically not live with our public sale, but I think if you go through the whitelisting process, you just magically.
You'll let me buy some though right now, though, won't you?
Sure, of course. And yeah, check out all our social channels are property_coin, and we're always available to chat. So we look forward to launching this thing in just hopefully a few days. We're supposed to be live May 1st, but I think with this new structure change, we're going to let the market digest a little bit and probably extend that date maybe a little bit later.
Fantastic. So write that down, propertycoin.re, RE obviously for real estate, and get in there, get into the whitelist, join the Telegram channel. You can chat about, obviously you can't tell us who some of your early investors are for privacy reasons, but it's good to know that you guys are actually holding some of the tokens, and good to know that your friends and family are actually in there as well. So if this ship goes down, we're all going down. That's kind of reassuring, and knowing that you guys have got a vested interest. And really love the way you're actually transforming communities and creating jobs and giving back to the entire community. That's fantastic.
Yeah. Thank you.
Thank you again for your time, and love to chat to you further about this. Talk soon.
Thanks.
Thanks, Andrew. Cheers.